Hey guys, welcome to another weekly focus. So if you realize there wasn't any focus this week, and that's because I was really busy and it was very difficult for me to have a look at my charts and to take any positions. So I'll show you guys the trade recap from the previous week, and I had one position. So it's been a very long time and I hadn't taken any positions, and I think I had one position on gold and I didn't even hold this for too long. So this was on April 15. So I went in on the buys on gold, and this was a very simple structure move. So we had an impulse, we had a pullback, there was an inability for prices to make further lows, and once price started moving again to the upside, I had my entries and I had a stop. So the stop loss was really wide on this, and that's fine just because of the market structure and everything. So as this started moving to the upside, and you can look at this, so you had an impulse, you had a correction, so you had the trend line I was playing with. Once we had a violation of this trend line around an area like this, as price broke to the downside, we had a pullback and a stop, so I took out my positions on this. Now this eventually played out and price kept moving to the upside, but as per my trade management, if I have a trend line and price breaks out of this trend line, it just invalidates the structure I'm looking at, and so I had to close this, and I think I closed this at plus 2.1%. So it wasn't a bad one. If I had it a little bit longer, I'll probably have made more, but then it invalidates the things I'm looking at and the structures I'm playing with and the way I look at trend lines. So I made plus 2.1% on this. So that was the only position I had the previous week. Now let's look at, let's say, the charts and see what other positions we have. We'll start with the DXY and everything. Alright, so here's a DXY on the weekly time frame. So if you look at the charts, you see some minor modifications. So for example, initially I'll have a trend line moving like this, and if I'm looking at the bullish direction thing, I'm looking at an impulse, correction for another impulsive move. But currently you probably see my charts having like this channel, so you're seeing the reaction from both sides. So you're seeing the reaction from the buyers and you're seeing the reaction from the sellers. Now this is just a minor tweak thing I've done, and it's very easy. You just have to, so initially if you come here, go to the star, and you can take out the first one. So if I do something like this, you're not seeing the reaction from the sellers, but if I put this, now you can see the reaction from the sellers as well. So you have a pivot point set and you see price moving to the upside, and it's the same thing. Once you have a pivot point set in both directions, you can see price reacting from those areas. You look at the sells, pivot point, you look at the buys. So it's the same thing, pivot point, and you're expecting prices to move again to the upside. So let's zoom into this piece right here and we'll look at the DXY and see what's happening. So when you're looking at it, so my take on this is, on the weekly time frame, I'm looking for the market flow, and market flow is simply like the structural move and how price is moving, where price is most likely going to gravitate to. So if you look at this from a higher time frame, you're looking at an impulsive move. You have sellers coming in, so you had a reaction from sellers right here, taking prices to the downside. Inability, pivot point set, you had buyers coming in, and once you have a pivot point that's been set like this, there's another one all the way to the downside right here, and you're looking at this piece right here, you're expecting buyers to react again from an area like this, taking prices to the upside. Now this is on the weekly time frame, and it's very massive. It's going to take time for this to play out, so it's always important for you to look at this from a higher time frame and just have an understanding as to where price is most likely going to gravitate to. So we look at this again on the weekly time frame. Here was an impulsive move and we had price pulling back, so you had a pivot point that was set right here and price pulls back to this pivot point. So looking at it from this pivot point, what I'm expecting is for prices to move again to the upside. Now this is from the weekly time frame. Once you go to lower time frames, you'll see a different structure that's playing, and you probably see sellers in control. So you're looking at this from the weekly time frame, looking at this pivot point, price should normally get a rejection from an area like this and keep moving again to the upside. Now if price moves to the upside, the point of interest for me has to be, first you have this psychological level of 110. So you have this psychological level right here, you have the psychological level of 110, you have these highs right here. So these are the areas I'm looking at as potential areas where price can travel to. So if the weekly time frame maintains a structure which is moving to the upside, and it's very easy because you have an impulse, right here, and everything you see right now is just a correction coming to the downside. If this maintains its movement, like the structure thing, the flow of the market, impulse, correction, impulse and correction, higher highs and higher lows, I'm expecting prices again to move to the upside. Now, especially with prices reacting from this pivot point, so it's just like the trend line thing, but the pivot point is where price actually bounces off of. So I'm looking at this piece right here, and price can bounce off of this area. If price starts moving to the upside, we should clear this psychological level of 100. This piece right here, we should go above 100, and if we go above 100 and stay above 100, so you're looking at this area right here, we could see prices coming back in, having a test of this area, and we should expect prices to move to the upside. So that's the bigger picture thing for me on the DXY, and this is on the weekly time frame. Now if you step, let's say, to the daily time frame, it's a little bit different. So you're looking at this on the daily time frame. Now, as per the market flow thing again, what's happening on the daily time frame, it's slightly different from what's happening on the weekly time frame. So on the daily time frame, who's in control of the market right now? You have sellers coming in, and you can see price making lower lows and lower highs progressively. So you have your impulsive move, you have your pullback, you have another impulsive move, you have a pullback, you have an impulsive move, and you should expect a pullback. So this is on the daily time frame. Now sellers are in control on the daily time frame, but the big picture thing on the weekly time frame, on the monthly time frame, 3 months, 12, so buyers are in control. So on the daily time frame now, sellers are in control, and you need to respect this. So if price keeps moving to the downside on the daily time frame, how is this price going to move, and where is price most likely going to gravitate to? So I'll zoom in on an area like this so we can just see like the structure thing and how price is moving to the downside. So let's see this area right here. The movement is really easy. So you have an impulse, you get a correction, you have an impulse, you get a correction, you have an impulse, you're expecting a correction. So on the daily time frame, the flow is to the downside, and if the flow is to the downside, then we're looking for the impulse, we're looking for the correction. Impulse, correction, impulse, correction. So there's two things I'm looking at right here. Now the first is, I'll zoom in again just a little bit so I can show you guys. So you have this space right here, you had an impulsive move, you had a pullback, you had price selling, there was an inability right here for prices to move to the downside, then you had a deeper pullback for the impulsive move to come in. So I'm looking at this space right here, you have another impulsive move to the downside, you have price making this lows, and you've had a pullback. So we could see the same thing happening right here. We could see the DXY selling again to the downside, and let's say an inability for prices to move again to the downside, then you could expect a deeper pullback to come in. So these are just possibilities I'm looking at. But going off of the market flow on the daily time frame, price is flowing like to the downside. It's making lower lows and lower highs, lower lows and lower highs. And my understanding is on the higher time frame, on the weekly time frame, price is reacting from the trend line on the weekly time frame. So the buyers are still in control of, let's say, the bigger picture thing. So in as much as the daily time frame is selling to the downside and the weekly is buying, so I'm looking at this now, there's some confluence right here because the weekly is trying to buy and then the daily is selling. But if the daily has to keep selling, you need to see some kind of a pullback coming in, and what's happening on the daily time frame can align with what's happening on the weekly time frame. So you might see price selling a little bit again to the downside, an inability, when you see prices moving back to this trend line. Now if price comes back to an area like this, you're expecting prices to sell again to the downside, or you get a violation of this piece right here, you get a test and you see prices moving to the upside. So that's a possibility. Now another possibility, you could see, let's say, price moving to the upside. So you get this movement to the upside, you get a pullback, you get a movement, you get a pullback, and stuff like this. So The take for me again on the DXY, looking at what's happening on the weekly time frame and looking at what's happening on the daily time frame. Overall flow on the weekly time frame is to the upside. Here's a piece right here. So the overall flow on the weekly time frame is to the upside. You get an impulse, you get a correction, price coming back to this pivot point, and you're expecting the buys. So that's it from the weekly time frame. On the daily time frame, same thing. Now the only difference is looking at the current price action, price is moving to the downside, and if price has to continue moving to the downside, it's going to give you the impulse and the correction, the impulse and the correction. You're looking at an impulse, you're waiting for the correction, and for price to either move again to the downside or an inability for price to move to the downside. You get a break, you get a pullback, and you get a continuation move to the upside, which then aligns perfectly with what's happening on the weekly time frame. So that's what I'm looking on the DXY. Now I'll step back to the weekly time frame and I'll show you guys again something. So looking at this on the weekly time frame, in as much as price is moving to the upside, there's always two sides to the coin. There's a possibility we might even see this trend line getting violated. So it's always important for you to look at both sides of the coin. So you're looking at this impulse and you're looking at a correction. So normally, as price gets to an area like this, which is a pivot point, you're expecting the buyers to step in and take prices again to the upside. And this piece right here, this psychological level of 110 is the area I'm looking at. So rejection of this area, of this trend line, I'm expecting prices to move to this psychological level right here. Now, what if this doesn't happen? What if the sellers have a lot of pressure coming to the downside and it makes it really difficult for the DXY to keep moving to the upside? Then you could see this trend line getting violated. You get a test of it and you see price moving to the downside. So that's the other possibility. But when I look at the structure thing, when I look at the flow of the market, I like playing what's happening currently, like the move that's currently in place. So you're looking at this move that's in place, you're looking at the impulse, you're looking at the correction, and I'm expecting prices to move to the upside. So I'm going to maintain this bias on the DXY unless price does something completely different. So we're breaking out of the trend line and then we're moving to the downside. That's the only reason I'm going to switch my bias on the DXY. So bigger picture thing again on the DXY, we're moving to the upside. If you step down to the daily time frame right here, you can track the movement thing just so you can look at them. The reverse at the point where price reverses. So if you really want to say the DXY has started moving again to the upside, you need to gauge this movement thing. So price is moving, impulse correction, impulse correction. You need to see an inability for prices to move to the downside. You get a break of this trend line, you get a pullback inability, like a break and testing. Then you're looking for prices to move again to the upside. So currently we're still in this downward flow on the daily time frame. So I'm just going to stick with the downward movement thing on the DXY. So let's look at this on the 8-hour time frame. Pretty much the same thing with what's happening on the daily. So you look at impulse, correction, impulse, correction, impulse. Now price is correcting. So if we maintain this correction, we should see prices having a test of this area. So you're looking at the correction coming into areas like this. So if we get a correction, I'm expecting a movement to areas like this, pulling back all the way to an area like this. So now there's a lot that can happen. I mentioned this already. You might even see prices just failing, coming back to the downside, testing an area like this, an inability. Then you see prices moving again to the upside, or you just see a continuation move all the way to this daily trend line. So there's a lot that can happen. The structure that price is going to give you, it's really, sometimes it gets really complex, but again, like the bottom line is you have an understanding as to where price is most likely going to gravitate to. So looking at the DXY, looking at the daily time frame, looking at the weekly time frame, where is price most likely going to gravitate to? I'm looking at this trend line on the daily time frame, which is the downward movement or the downtrend on the daily time frame. That's the most likely area for me where price can gravitate to. Just going off of the overall flow, it's an impulse correction, impulse correction, impulse correction. And on the weekly time frame, we have this massive movement to the upside. or this massive uptrend, impulse correction. So I'm going to stick on lower time frames on the DXY coming into like this coming week, and just see how price is playing off of these areas and pay attention to the structures price is giving me. And here's an example. I'll look for periods like this. If there's an inability of price to move again to the downside, just let's say you get a crash again to the downside. If you get a crash to the downside, an inability of prices to move again to the downside, and then we're expecting prices to move to the upside. Now if this doesn't happen and price just maintains this movement thing to the upside, then you're looking at an impulse correction, all the way to this piece right here, which is a trend line on the daily time frame. So that's my bias on the DXY. So if you was to ask me, the overall movement thing I'm looking at for this week, or let's say for next week on the DXY, is a pullback to the daily trend line. So we're expecting more buys on the DXY. So that's the bias for me on the DXY, and I'll see how this plays out. And yeah, I think it's going to help me to take other positions on other pairs and just execute properly. So that's my analysis on the DXY. So let's look at the next pair. Alright, so the first pair we're looking at is US30, and this is on the weekly time frame. So the reason I'm looking at the weekly time frame is just because I'm looking at the overall picture. I'm looking at the flow of the market. I'm looking at the structure price is giving me, just to have an understanding as to what price is doing on the bigger time frame, so I can execute properly on lower time frames. Now I mentioned this already on the DXY, so I've included the channel thing, and it's not different from what I've been doing before. So a channel is simply a trend line, but then the trend line is appearing in both directions. So you're looking at it from the perspective of the buyers, and you're looking at it from the perspective of the sellers as well. So if I zoom out on this pair on the weekly time frame, so the question you have on the weekly time frame is, how is price moving? Where is price most likely going to gravitate to? And what psychological levels can you look at? So on the weekly time frame, here's the market flow thing. You have an impulse, you get a correction, and from there on you see price giving you this impulse correction. So once you have the overall flow of the market, it makes it like really easy for you to anticipate the next moves. So I'm looking at this on the weekly time frame, and I have the flow of the market to the upside. So price is moving to the upside. I have my trend line that just helps to gauge the momentum and how price is moving. So you get an impulse, you get a correction. So this is why the trend lines is very important, because if you're looking at this space as a channel, then you're expecting let's say a rejection around an area like this, and you're expecting prices to move all the way to the downside to this area, so you can take buys off of this area to here, look for sells to this area. Now once you understand how price is moving, like the market flow, it makes it completely easy. So looking at this pair on the weekly time frame, we had an impulse, we had a correction, which didn't come all the way to the downside. Now if you're using single trend lines, it's also very easy, because once you have a break of a trend line, then you're expecting prices to deliver to the higher time frame trend line. It's something I explained already. Now to make it completely easy, you're looking at this flow right here, that's an impulse. You're looking at this as a correction, and you see price reacting from areas like this. So these are just pivot points where price reacts from and makes new highs and stuff like that. So on the weekly time frame, this is the structure I'm looking at. How is price moving? What's like the overall picture thing? And from a bigger time frame, so from a bigger time frame, the overall movement on US30 is to the upside. So you have an impulse, you have a correction, you have an impulse, you have a correction. So if this area serves as a pivot point, and if this area should hold, then normally you're expecting prices again to move to the upside. So same thing. From here you get an impulse, from here you're looking at the impulse, from here you're looking at the impulse, from here you're expecting an impulse again. So that's what I'm looking at on the weekly time frame. So already just looking at this, I know at some point we need to resume the buys again to the upside. And this helps me now, because the reason I even had to incorporate this is, let's say, from the crash we had a couple of weeks ago. So once we had the crash and everything, I was back testing and just looking at price and understanding structure again, and I just realized it makes it completely easy if you bring these channels and you look at the trend lines, the pivot points within the channels. It makes it really easy for you to anticipate certain moves before it happens, and you can just trade more effectively from that point. So this on the weekly time frame. Let's see what the daily time frame is telling me. So once I drop down to the daily time frame, now I'm just looking at the piece within the overall picture thing. So you're looking at this point, price takes off, price takes off, price takes off. So you're looking at the pivot points, and on the daily time frame, price is reacting off of this pivot point. So we had a crash thing. So we had this build up and we had a pullback, and the principles again remains the same. Once you have an impulse, you get a correction, you're expecting prices to move to the upside, taking out these highs. So the same thing that's happening right now. So you look at this, it's an impulse. Everything that came, let's say, the previous weeks, it's just a correction thing, and I'm expecting prices to take out these highs so we can move again to the upside. So now let's zoom in to an area like this, just so we can look at price and look at the psychological levels we can play with. So how is price moving on US30? And we'll look at it on the daily time frame, step down to the 8 hours, the 4 hours, and most likely I think on the hourly time frame I'll show you guys the position I'm most likely going to take on this pair. So where is price most likely going to gravitate to? So we're playing off of this trend line right here. We're playing off of this trend line, and we've seen buyers holding prices at this area. And in as much as there's been this trade war, there's been this tariffs and everything between the US, China, and the rest of the world, price hasn't really dropped below this area right here. So we had an impulsive sell, and price held, let's say the buyers held prices at an area like this, and we haven't really had sellers taking prices all the way to the downside off of this area. So if this is the case, and you have an impulsive move and you have a correction, what this tells me is there's a high possibility price is going to take out these highs right here. So price is going to take out these highs. So the coming weeks, we should expect the DXY to eventually break out of this trend line. So if you put a trend line right here, you can gauge the movement again to the downside. There's two things you can use. You're having a trend line just to gauge the momentum, or just to gauge the movement in either direction. It can be to the upside, it can be to the downside. So you're looking at this, you can put your trend line right here and you see how price is playing off of these areas. And once you get a breakout of this trend line, you can get a retest, and you're expecting prices to move to the upside. And you can use psychological levels as extended points of interest. So if price breaks out of this area, you're looking at these highs for price to test these highs, and you're looking at price moving again to the next psychological level. So it gives you a very big area you can play with, and if you start taking the buys, it makes it completely easy for you to hold these buys over a period of time. So you're increasing your risk to reward, and you're holding it longer. You're looking at the swing moves. So that's the structure thing I'm looking at on the daily time frame. Now we can step down to lower time frames, and I'll show you what I'm looking at. So before we step down to lower time frames, I'll show you one structure thing again right here. So you look at the impulse, you look at a correction. Once you have an impulse, you get a correction, you're expecting prices to move to the upside. Now let's study this correction on lower time frames. So I'll step down to the 8-hour time frame real quick, and just the same thing. You put a trend line and see how price is reacting off of this trend line. So price is moving to the downside. You have an impulse correction, impulse correction, impulse correction. So looking at this piece right now on the 8-hour time frame, where is price most likely going to gravitate to? So if you're looking at this from a bigger picture thing, from the daily and the weekly time frame, you're expecting prices to move all the way to 50,000. But you need to understand, on lower time frames, you have trend lines on these lower time frames as well. that's telling you price is moving in the opposite direction, or the correction. So you're looking at this correction on lower time frames, and you're using the trend lines to gauge the correction as well. So as you gauge the correction on lower time frames, you're seeing the impulse, correction, impulse, correction, impulse. You're expecting a correction again to an area like this. So what this tells you is on lower time frames as well, you have pivot points that has been set on lower time frames and in the opposite direction, because now you're looking at the sellers coming in. So where is price most likely going to gravitate to? Same thing. If you get an impulse correction, you're expecting prices to gravitate to this trend line on the 8-hour time frame. So is there a possibility for you to trade prices all the way to the 8-hour trend line? There's a possibility, but I do it differently. So if you step down to the 4-hour time frame, so hold on, look at this on the 8-hour time frame. If price has to move to the upside, we should see prices getting all the way to this trend line on the 8-hour time frame. Now this is very interesting. You have this psychological level of 40,000. Price is currently trading above 40,000, and going off of the principle of psychological levels, if price goes above one psychological level, you get a test and you see an inability for prices to move to the downside, then you're expecting prices to break out of this area, giving you a test, and you're expecting prices to move to the upside. Now this is something that's going to take time. It's going to take weeks for this to happen, because you're looking at this on higher time frames. Price is not just going to break, test, and just move again to the upside. Now you have an understanding as to what price is going to do, but the structure that it's going to give you sometimes is very complex. So step down to lower time frames and just see how you can play within the minor structures. So here's on the 4-hour time frame, and here's what I'm looking at. So you have this trend line, so I'm going to keep this on the charts. Let's see, probably see this on the 4 hours, 1 hour, and stuff like that. So here's on the 4-hour time frame. Now price is moving. So if you look at this on the 8-hour time frame, you have this trend line. So I'm looking at this trend line, and every time you have an impulse, you get a correction, you get an impulse, you get a correction back to this area where you're looking at this as a pivot point. So you get an impulse again, price is reacting off of this area, which you can look at it on higher time frames, and you have buyers coming in. So where do you think price is most likely going to gravitate to? Price should most likely gravitate to an area like this right here. So what's the structure move on the 4-hour time frame? And you can look at this on the hourly time frame as well. Now the flow of the market is very important. So how is price flowing? How is price flowing to the upside or to the downside? So you look at this impulse, you get a correction, and you're expecting prices to give you another impulse to this area right here. So that's a flow I'm looking at right now. So I didn't take the bias off of this area because I wasn't really convinced with the move, so I didn't take the bias off of this area. Now let's step down to the hourly time frame and I'll show you what I'm looking at. So I'll take this off of the hourly. Cool. So on the hourly time frame, this is what I'm looking at right here. So I have this trend line on the 8-hour time frame coming to the downside. So now this is very important, because if you're looking at the flow again, you have an impulse, you have a correction, and so you're expecting prices to give you another impulse again to the upside, when like playing between the channel thing. And once you understand how channels play and how to trade with channels, it's like a ping pong thing. So you're having price moving to the upside, it bounce, so you get a bounce off of the trend line on the upside, price coming to the downside. It's just like ping pong, like it hits up, comes down, so it's just bouncing within this thing. So you're looking at this piece like this, and that's how price should normally trade within a channel. So looking at this piece right here, the market flow is very important again. So you get an impulse, you're waiting for the correction, and you're expecting prices to move to the upside. So how do you get involved in a move like this? Now you need to ask yourself certain questions, and when I look at a situation like this, it's very easy for you to get, let's say you see price moving to the upside, so you might consider this as a buy. And here's the reason why I'm not taking this as a buy. So you're considering this as a buy, you know there's a trend line on the 8-hour time frame, so price should most likely move like this to the upside. Now this is a possibility, and that's a good trade. You can take that as well, but I'm not trading off of that structure right there. So if you remember, if I have a trend line, so let's say price is moving, so let's take this one for example, and let's edit this right here. So initially I had just one trend line on my chart, and you get an impulse, you're waiting for the correction, you get an impulse, you're waiting for the correction. So it's always easy for you to trade off of the main pivot points. So the pivot point on this trend line right now, if I take this out, so the pivot point on this trend line, on this, yeah, you can say trend line or channel. So here's your pivot point, you're looking at this space, you're looking at this space. So price might move to the upside, but everything within this area, it's very risky for you to trade off of this area. So the best way is for you to wait for price to come back to an area like this. Then you can look for buys again to the upside. So if you trade within the channel thing, it's always very tricky because price can break out of this area. So you see price moving to the upside. Price might break out of this area, giving you a test of this area right here. There's a psychological level of 40,000. You have this inability right here, and you see price coming to the downside. So here's a possibility, and then off of this, you see buyers coming in. And the reason is because the way I look at price, I consider this as pivot point. And again, I'm expecting the same thing off of this area. So I'll look at this space as an impulse, and I'll wait for a correction, and I look for buys again to the upside. So that's how I look at prices. It's always an impulse correction, impulse correction. Now, here's a simple question. You have an impulse right here. You have a correction. Why don't you look at this as an impulse correction, impulse correction? Simple answer. Impulse correction, pivot points. So I'm playing off of this. So I'm looking at these areas right here, and it makes it completely easy for me to play within the structure. So it's always easy for me to play off of like the structure or the trend line, some higher time frames. It just makes it completely easy. If you keep going, let's say, to lower time frames and lower trend lines and lower time frames, it's very easy for these trend lines to get violated, and then it makes it, let's say, the entries are not that effective or the trend lines are not that effective. So I just look at trend lines on higher time frames. It doesn't mean you looking at this piece right here means you're wrong. Now, if you had a buy here, that's good because you're looking at this as an impulse correction. You could take a buy off of areas like that, but personally, I'll look at this pivot point, wait for price, pivot point, and I'm looking for buys again to the upside. So that's something that makes it completely easy, and I'll probably do a video on the channels and show you how I use channels just to gauge the market flow and understand how price is moving and who's in control at certain points and certain areas you can watch out for. If price comes back to these areas, you're probably looking for buys or you're looking for sales. So here's my analysis on US30. If I had to take a position on this, I'll probably have to wait for something like this. Let's say pull back to an area like this on this trend line, and they will see prices moving to the upside. So here's the only way I'll probably look for entries on this pair. So if we get prices pulling back to an area like this, so we can look for maybe a 1:4 off of an area like this. So here's my analysis on US30. Let's see price pulling back to the downside. You get this inability. So you see there's an inability right here, inability right here. You look for the same thing, inability right here, and we'll look for prices to move to the upside. So that's my analysis on US30, and we can look at the next pair, which has to be NAS100. Alright, so here's NAS100, and here's on the weekly time frame as well. And again, it's very important. When I step to higher time frames, the reason I look at higher time frames is just to get the market flow. Just trying to understand how price is moving, where price is moving to, where price is most likely going to gravitate to, what trend lines I can use, and psychological levels I pay attention to. So the market flow on this time frame, you look at this as an impulse, you get a correction, And within this overall structure thing, you have impulse, correction, impulse, correction, impulse, then you have a break. So everything right here is an impulse. Now this is a correction thing, same thing, impulse, and you had minor structures within this impulsive move. So everything, it's an impulse right here, correction, it's an impulse, and you get a correction. So looking at this piece right here, if I'm going over the flow on the weekly time frame, it's an impulse, correction, impulse, correction, and I'm waiting for another impulsive move. So the long-term move on NAS100 is for us to see prices moving again to the upside. And if price has to move to the upside, so going off of this bounce, let's say buyers reacting off of this area, I'm expecting prices to move all the way to 25,000, which is this psychological level right here. So 25,000, which is this psychological level right here. So that's the area I'm looking at, and I'm expecting prices to move all the way to this, like to that psychological level thing. So long term, big picture thing, I'm expecting NAS100 to move to the upside. That's a big picture move for me on NAS100. I'm expecting the buyers to dominate. Let's say in 3, 4, 5 weeks from now, I'm still expecting the buyers to dominate the movement thing to the upside. But we might see minor corrections coming in, we might see pullbacks coming in, so it gives us opportunities to take prices again to the upside. Now looking at it from the weekly time frame, I have these areas. So you're looking at this piece right here, pivot point. You're looking at this piece right here, same thing, pivot point. So you're looking at this piece right here, and you're expecting this to be a pivot point as well. Now, if this is a pivot point, then I'm expecting prices to move all the way to the upside. Now, I have this piece right here, and I'm looking at this as well. So it's a minor structure within the overall structure thing. So if we're taking the buys on NAS100, you can step down to lower time frames. So let's start with the daily time frame and see what's happening on the daily time frame. So same thing. So we're looking at this piece right here. So you get an impulse. Remember, everything on the weekly time frame is an impulse, and everything is just a correction right now. So if price has to move again to the upside, where you're expecting prices to navigate to or gravitate to. So going off of psychological levels, we haven't tested 15,000 because we had this trend line right here. So there was a rejection right here from the buyers. Now the next psychological level, it's 20,000 right here. But the bigger psychological level I'm looking at is 25,000 because I'm looking at this on the weekly time frame. So if this price is moving to the upside, you can look at the minor structures and see how price is moving. So on lower time frames, there should be a trend line right here. So you're looking at impulse correction coming back to an area like this. So on the daily time frame already, you can tell there's a violation of this trend line right here. And with this trend line getting violated, now I'm expecting buyers to dominate this market. Now this is not going to be, let's say, an easy move to the upside. So yes, you have this price moving to the downside, and yes, you have price violating and moving to the upside, but there's still a possibility. Remember, you're playing off of this pivot point. So you might see buyers stepping in, moving to the upside and doing stuff like this. Then you get a correction back to this area and you see prices taking off to the upside. Or you might see price giving you a major movement thing to the upside, giving you a correction to an area like this, and you see a move to the upside. So my take is, it's always very complex when price starts reacting from the pivot point. It's not just going to move directly to the upside, because if price had to move to the upside every time it comes to a pivot point, then it makes it very easy for you to predict the move and easy for me to predict the move as well. So looking at it, I know price has to move to the upside because I'm playing with an impulse correction. So all I have to do is step down to lower time frames and see what structure price is giving me. So let's look at this piece right here. So on the 8-hour time frame, this is something I've been looking at. So we had an impulsive move, the trade war and everything. You had this correction right here, the trade war, tariffs and everything. You had this spike to the downside, like that was a crazy move to the downside. But when you look at this, Price has taken its time. Sellers have been in control, impulse correction, and it was very difficult for me to even take entries on this pair because everything just looked crazy at the time. But once you look at it, let's say on the bigger time frame, you probably see what's actually happening. It's an impulse, it's a correction, and you're expecting price to move again to the upside. So on the 8-hour time frame, you start studying this correction thing. So you look at the correction that's coming in. So you look at the same thing, impulse correction, impulse correction. So normally I was expecting prices to react off of this area and take prices to the downside. So I was expecting sellers to come in from an area like this and take prices again to the downside. Now this didn't happen, and now we're trading outside this trend line. So this is an early indication telling us buyers are in control already. So all we have to do is wait for the pullbacks to come in, and then you look for buying opportunities. So if you step down to the 4-hour time frame, and this is something I'm looking at currently on the 4-hour time frame. Now what's the flow on the 4-hour time frame? And this is very important because you can use this flow on the 4-hour time frame and most likely step down to the hourly and look for possibilities to trade. So the flow on the 4-hour time frame, it's an impulse, it's a correction, it's an impulse. Now what this does is it makes it completely easy for you to map out the pivot point. So you're looking at this origin thing right here, you're looking at the reaction right here, and this is why you use the channel thing. So it gives you the opportunity to gauge the movement from the sellers and the buyers and stuff like that, and it makes it completely easy. So you look at this piece right here, you get a reaction from the buyers. Now everything that's happening within this area, it's sometimes very difficult for you to get those entries there or to take those trades and perform like really good. It's always very tricky. That is from the way I look at price. Now it might be different with the way you're looking at it. If you're doing supply and demand, support and resistance, it might be completely easy for you. But I'm looking at trend lines, I'm looking at psychological levels, which is a slightly different approach to how you might be looking at it. So impulse correction, impulse correction. So you're looking at this right here, sellers coming in, buyers coming in, buyers coming in. So this space, this space, and this space. So if I'm looking for possibilities to trade NAS100, I'm going to be patient and wait for prices to pull back to an area like this. Just hold on and see if prices can pull back to an area like this, and I look for buying opportunities again to the upside. Now because we have in this psychological level here of 20,000, this might be an area for me to look for buying opportunities to an area like this. Now if we break out of this area, we might get a test of this trend line, and you see prices coming to the downside. Again, there's always two sides to the coin. I'm very much interested in the buys, but price can sell as well. So it just makes it, let's say, completely easy if you have, let's say, the buyers in both directions. So you're looking for the buys and you understand sellers can come in as well, buyers can dominate, sellers can dominate. So it just depends on where price is at and what you're currently looking at. So the market flow on the 4-hour time frame, now this is it, sellers, buyers, you're looking at this piece right here, this. So personally, I want to see prices coming back to an area like this, and I'm looking for buyers off of this area. You look for the entry confirmation off of an area like this, and you're looking for buys again to the upside. So I'll look at the hourly time frame and let's see how price looks like on the hourly time frame, and if there's a possibility to trade off of the hourly time frame. All right, so here's the hourly time frame, and again the structure remains the same. What was looking on the 4-hour time frame, it's an impulse thing, it's a correction, it's an impulse. So because I didn't take the trade off of this area, because I didn't take the buys off of this area, all I'm waiting for is for price to pull back to an area like this, pivot point, look for buying possibilities, wait for the confirmation thing. Because what this does is it gives you the same thing. It's an impulse, you're waiting for the correction, and you're expecting prices to move again to the upside. So that's what I'm looking at. So same thing with what we had on US30. If I get a pullback, I'll expect prices again to move to the upside. So here's a trade thing I'll be looking at on NAS100, something like this. So here's a possible entry thing for me, and I'll probably take prices off of this psychological level. So if I can get a very good entry, this might be a 1:4, so like something like this. So here's a possibility thing for me on NAS100, and here's the only way I'm going to trade NAS100. Wait for prices to pull back, wait for the entry, the confirmation and everything, and we'll take prices again to the upside. So that's my analysis right there on NAS100, and we'll look at the next pair, and that's the S&P 500. All right, so here's the S&P 500 on the weekly time frame. So I think it's like the same structure what I was looking at on NAS100, because these pairs, they have like this correlation thing, and it makes it like really easy trading NAS on the S&P 500. So look at this on the weekly time frame. I have several psychological levels I'm looking at, and the trend line thing I'm looking at. I'm looking at the trend line from the buyer's perspective. I'm looking at it from the seller's perspective as well. So the market flow, if you're looking at it on the weekly time frame, it's an impulse, it's a correction, and everything. It's an impulse, you're looking at a correction, and you're expecting prices again to move to the upside. So every time you get a correction, this highs gets like, you take out this highs. So again, I'm expecting prices to move to the upside, and that's on the weekly time frame. Now the psychological level I'm paying attention to as prices moving to the upside, it's 6,000, which is this area right here, and we're playing off of 5,000. So price had a test of this area, and we're most likely going to see prices rising all the way to like 6,000, and we can even go higher than that, all the way to like 7,000. So looking at it from the weekly time frame, you have an understanding already. You understand the market flow, which is very important. So the market flow, it's an impulse, it's a correction. It's an impulse, it's a correction. So you're expecting prices again to move to the upside. Now, if this doesn't happen, for example, let's say price fails to move to the upside, and you get price trading to the downside, then you get a correction, and you expect prices to deliver again to the higher time frame trend line. So that's what I'm looking on the weekly time frame, and we can step down to lower time frames. I'll be a little bit fast on the S&P 500, because we're looking at the same thing with what's happening on, let's say, NAS100. So how is price moving? Where is price most likely going to gravitate to? So if you have everything right here as an impulse and everything as a correction, I'm expecting prices to take out these highs. I'm expecting prices to test the psychological level of 6,000, and I'm expecting prices to even go higher and test this psychological level of 7,000. So we're looking at an impulsive move to this area, and we're looking at an impulsive move again to 7,000. Now this again is going to take time. So if that's going to take time, it means price is most likely going to give you a very complex structure thing, where you're having pullbacks, corrections, and you're having impulse corrections on lower time frames. So let's watch this on lower time frames. So this is something I'll pay attention to on lower time frames. So the first question is, as price is moving to the downside, it's giving me this impulse correction. So on lower time frames, I want to see if buyers are stepping in already, and I'll put a trend line right here and just watch this on lower time frames, because if price is respecting the trend line, then you should respect the movement thing again to the downside. But once you get a violation, it's an early sign just telling you, all right, buyers are probably going to take control of this market thing again. So you step down to the 8-hour time frame, and this is what I'm looking at. So compared to what's happening on NAS, so you had an impulse, you had a correction, impulse, you had a correction. On NAS100, you had a clear breakout of this area on the 8-hour time frame, and this is why NAS and the S&P, it's very important to look at it as like correlating pairs, because in as much as we haven't had a perfect break, on the 8-hour time frame on the S&P 500, I can play with what's happening on NAS100 and look at the same thing on the S&P 500. So we haven't had a clear break on the S&P 500 right here. So I can tell you, based off of what's happening on NAS100, if I consider the break on NAS100 as a valid break, then I'll probably be looking at the break on the S&P 500. In as much as it doesn't look valid, but because of what's happening on NAS100, I'll consider this a break on the 8-hour time frame as well, and just say, all right, cool, the buyers are in control. It's an impulse, it's a correction thing, it's an impulse, it's a correction thing, and I look at how price is moving to the upside. So that's on the 8-hour time frame, and you can look at this on the 4-hour time frame too. So on the 4-hour time frame, similar to what's happening on NAS100. So I'll show you the structure thing again, but the flow on the 4-hour time frame, it's an impulse, it's a correction, and now price is moving to the upside. The only way I'll get involved in a situation like this, I want to see price pulling back to this area so I can take buys again to the upside. It's always difficult for you to take these buys off of these areas, because there's always this possibility of price pulling back to an area like this, so you can take prices again to the upside. So what price is most likely going to do, it's going to give you another impulse thing, and you wait for a correction so you can take prices to the upside. Same thing, impulse, dip, correction. You get an impulse, you get a dip, correction. So the reason again why you're using the channel thing is because it gives you the perspective from the buyers and the sellers. So let's say price doesn't pull back to this area and it keeps moving to the upside. So going off of this is sellers, buyers, buyers, sellers. So you're looking at this, sellers, you're looking at this, buyers. So if price keeps moving to the upside and it's completely difficult for me to take buys off of this area because I'm not seeing the reaction of the pivot point I'm paying attention to, I'll wait for prices to get to an area like this. I'll wait for prices to get to an area like this, and I'll look for sells all the way to this area. Wait for prices to get here, and I'll look for buys off of this area. So it's always the impulse correction, impulse correction, impulse correction. So that's the flow I'm looking at, and it's the same thing with what's happening on NAS100. So if I step down to like the hourly, so it's the same thing. If I'm looking for trading opportunities on this pair, now it takes a lot of patience just sitting on your hands and waiting for price to pull back. I'll wait for prices to pull back to an area like this, and I'll look for buying opportunities. So it's the same thing with the S&P, it's the same thing with NAS100, and I think it's the same thing with US30 as well. So that's the structure thing I'm looking at on this pairs. So here is it on the S&P 500. Same thing on NAS100, same thing on US30. So look at the possibilities. The flow on US30, impulse correction, impulse waiting for this. You can take prices this way. NAS100, impulse correction, impulse waiting for this. So you can take prices to the upside. Same thing, impulse correction, impulse correction. So you can take prices to the upside. Now, if price does something completely different, then I'm not going to trade it. I'm just going to sit on my hands. Now there's an advanced way you can look at this as well and look for this selling opportunity. Again, it's it's a little bit risky, and it's very easy if you play off of this pivot point. It makes it like completely easy. All right guys, so that's it on the S&P 500. Let's look at the last pair, and that's gold. Alright guys, so here's gold on the weekly time frame. So if we look at the market flow on this time frame, and again I have the channel thing, and the channel just helps you, the buyers and the sellers and stuff like that. So you see the channel thing with most of my analysis now. So the market flow thing, it's an impulse correction, impulse correction, impulse correction. Everything is an impulse, and once price got to an area like this piece right here, I was expecting a rejection of this area, so we can get a correction to this piece right here, and we'll look for buying opportunities again to the upside. Now this is very interesting because we had price breaking out of this area. So when you have a trend line, so initially I'll look at trend lines like this. Again, I'll look at trend lines like this, impulse correction, and I'll tell you once you get an impulse and you get a correction, if this correction fails to move to the upside, you get a break right here, you get a test, and you expect prices to move to the downside. So it's the same thing with this one moving to the upside thing. So if you get an impulse correction, you get an impulse and you're waiting for this to break, and no, you're waiting for this rejection so you can see sellers coming in. So this failed and we had price moving to the upside. So again, you have a break to the upside, you can expect a test of this area right here. So you see prices moving again to the upside. So it's the same thing, it can happen in either directions, to the upside, to the downside. It's basically the same thing. So what psychological levels am I looking at? Where is price most likely going to gravitate to? We've had a break of this trend line where we was expecting prices to move to the downside and the buyer just went completely through that area. So if we get prices pulling back and we're expecting to move to the upside, and again, the big picture thing on the weekly time frame, I'm expecting prices to get all the way to like 4,000 on gold. So that's gonna make like crazy highs on gold all the way to 4,000. We did 3,000 already, and this is an area most people didn't even expect prices to get to. So you're looking at this space right here, you had a pullback and prices went all the way to like 3,000. So price can get to any level, and there's no reason for you to look at it and say, oh, it's going to be very difficult for us to see prices getting to 4,000. It was difficult for people to admit price was going to get to 3,000. So it's also going to be very difficult for people to admit price is going to get to 4,000. Now, if we maintain this movement thing to the upside and there's an inability for prices to go through or to pull back inside an area like this, having a test and a drop, if there's an inability for this to happen, then you most likely see price moving again to the upside. Now you can watch this in lower time frames. You look at the daily time frame. Now this is a perfect example thing I'm explaining. So you get an impulse thing, you get price coming back, just pulling back, having a test of this trend line, and you could see price moving again to the upside. So how do you study this in lower time frames? I'll look at the 8-hour time frame, for example. So here's the thing, I was looking at the 8-hour time frame. So I was looking at an impulse correction thing, and I was expecting this trend line to hold. So this trend line had a break. So we had a break off of this trend line, but pay attention to what's happening. Look at this break on the 8-hour time frame, and then you compare it to what's happening on the daily time frame. It's an impulse, it's a correction. So you're looking at a break of a trend line on the 8-hour time frame. So you're looking at a break of the trend line on the 8-hour time frame. So you get an impulse and you get a break of this trend line on the 8-hour time frame. Now, how does price move? How do we look at prices and how do we look at the market flow thing? It's always an impulse, it's always a correction, and price moving to the upside, taking out the highs. So looking at this as well on the 8-hour time frame, everything right here, it's an impulse, and everything happening right now is a correction. So if price has to move to the upside, we should take out this area and see price moving to the upside, giving you the impulse, correction, impulse. So that's what I'm looking at on the 8-hour time frame. And you can step down again to lower time frames. Now on this lower time frames, this is something I'm paying attention to. There was an inability right here. So you had sellers, rejection from the buyers. You had sellers again, rejection from the buyers. So looking at this and just looking at this, if I had to take, let's say, entries, you could probably look at entries right here on gold and just put like your stops below this area. And if you say, all right, cool, I just want to see price taking out these highs, you're probably playing with like 1:3 right here. But you can step down to lower time frames, let's say the hourly, and look for better opportunities. So here's the position I had the previous week. Right here I had the buys and the stop because price was trading outside the trend line thing. So I'll take this out in a bit. So let's take this out. So all right, cool. So this is what I'm looking at currently. So I'm expecting prices on gold to move to the upside right now. So once the market opens, you can take this already as buy based off of the analysis we're looking at. So we're looking at an impulse, we're looking at a correction. There's an inability for prices to move to the downside, and I'm expecting prices to move to the upside. So this again is an impulse correction, so you can take prices to the upside. So I didn't take this trade on Friday. but I'll most likely look for entries on, let's say, once the market opens on Monday and stuff like that, so, or early or late on Sunday. It just depends on what price does. So we could see price opening, you get another impulsive move right here, and you wait for, let's say, a pullback, just so you get a better risk to reward, and you're looking for buys. But with the way price is at, like currently, I could take the buys off of an area like this and have my stop loss at an area like this. And again, it's just a swing move thing. So right here, so the first target for me has to be this area. So let's see if we can take out this area and see how price moves to the upside. So this is very important, because once you understand how this moves and you're looking at what's happening on the daily time frame, if this is a proper rejection on the daily time frame off of this area right here, then you're looking at an impulse correction and an impulse. So we'll most likely take out this area if price has to give you this impulsive move again to the upside. So that's something I'm looking at. So let's step back to the hourly time frame. So this right here is a buying opportunity thing. I'm looking at the hourly time frame, so it can go higher than this because we're looking at the next impulsive move, and that is it right there. So here's a possibility I'm looking at on gold on the hourly time frame. So at least, like, say a minimum on this trade should be, let's say, 1:5, 1:6, 1:8. Those are all possibilities on this pair right here. So just depending on how you get the entries and where your stop loss is at, you can look at this. So this on the hourly time frame, and I've shown you like my thought process behind this. It's an impulse, it's a correction, there's an inability for prices to drop. So once you look at this inability right here, it ties down to what's happening on the daily time frame. So it's very simple. It's a break, it's a correction right here. You look at this on the hourly, you look at this on the hourly and you look at the same thing. So how is price moving? It's an impulse, it's a correction, that's an inability right here, and you're looking for buying opportunities. So I'll probably look at how price reacts, let's say, once the market open, and see if I can get like a perfect confirmatory, like perfect confirmations, and look for buying opportunities on gold again to see prices moving to the upside. Now if I'm wrong, I explained this already. If I'm wrong, you can look at this, you can look at this on the weekly time frame. If I'm wrong, then you should expect prices to drop back into this channel thing, drop back, test, and you look for selling opportunities to the downside. And you can consider this, let's say, it's a fake out thing, which is not like something I really look at like fake out. I have a different way I interpret those prices right there. So again, I'm looking for those buying opportunities. It's a little bit tricky when you look at the way the weekly candle closed, because this right here is like a rejection thing from the sellers, and now it makes it a little bit, looking at it on the weekly time frame with the way this candle closed, it makes it a little bit tricky looking for those buying opportunities. But again, it's an impulse correction, and I'll look for buying opportunities just so we can test these highs on lower time frames. And if price doesn't take out these highs, so we're looking at this on the hourly, if price finds it difficult to take out these highs, then that's fine. We'll look for the sales and we'll look for selling opportunities. It just depends on how price is going to play out. So but my bias currently is still to look for buying opportunities on gold and to at least see prices testing this highs right here. So that can give you, let's say, 1:3, 1:4, and it's not bad. It's not a bad trading opportunity thing right there. So let's see how price reacts off of this area, and I'll update you guys if I take any positions off of this. And I hope this made sense. I hope you had some value off of this, and if you did, don't forget, be patient and trade consistently, and I'll see you during the next one. And don't forget to watch the previous market focus just so you understand what we're looking at and the modifications we're doing. All right guys, thank you, see you during the next one. Bye for now.